So really welcome. Happy Memorial Day weekend. Happy first day of summer. And we're here to talk about donor advised funds in our 10th webinar in what became an unexpected series in navigating 2020. So really glad to have you here and really excited to be kicking off summer with you all. Quick note before we dive in too much. So this event is CFRE approved. We've been really grateful to the folks at CFRE who've turned these things around pretty quickly, and to my colleague Simone, who's been making that possible. So the first 9 webinars are also available on our resources page. We'll send that out after this one, but that should get you through, in total, this should get you through 2 years of professional development if all you want to do is watch these webinars. Hopefully you have other assets as well you can use, but they're all free. And we know a lot of people are belt tightening, but still want to learn a lot. So these are all available for you and should be really easy. And then at the end, we'll drop a question in the chat. That question will certify your participation so that we keep our records for a few years to make sure that if CFRE ever wants to audit you, which is very, very unlikely, that you get a chance to, we can prove that you were here. So make sure to fill that out if you don't mind. It's also really helpful to get feedback for us as we continually make these better. All right, so what are we going to talk about today? Quick intros as usual. We'll do a snapshot of DAF giving, how you all are feeling about it. We'll talk about what to expect in 2020 and potentially 2021 as well, as you start to think ahead for the next year. We'll talk about some strategies for breaking through on DAFs. We'll share some new ideas, and then we'll get right into Q&A. So a lot of people have a lot of questions about donor advised funds. Hopefully we'll answer a bunch of those in the presentation. If not, I'll stick around and we can tackle whatever is tackleable. And in some cases, we'll just admit that we don't know. All right, so many of you know me. I've been really lucky to interact with many of you in person. My name is Patrick Schmitt. I'm the co-founder and co-CEO alongside my brilliant co-founder, Jenny Xia. My background is originally in nonprofit fundraising, and I used to run email fundraising with President Obama. And so take a lot of a data-driven approach to now major giving and planned giving. And one of the things I'm most thankful for at the moment is working alongside all of our wonderful teammates. So we work with about 55 to 60 people, usually in New York City. Now about half of us are still in New York City and half the people are quarantining somewhere else. So that's been really fun. It's been a big adventure for the team and for me. We've been able to raise $1.4 billion of bequests, QCDs, stock gifts, et cetera, and have been thinking even before this about how to take planned major giving online. So really happy to have a chance to give back to the community that's been so special to us. So we always ask how your week is going and what you're thinking about. This is really great. So take a look at that blue line, which is going up week over week. And you can see that happiness is at its highest it's ever been since quarantine and COVID started. It's a wonder what a long weekend can do, but also I think people are starting to make their way and figure out a path forward. You can also see an incredible drop in anxiety over last week, which is really interesting. Maybe it's having a little bit of time off. Hopefully these are a little bit helpful in anxiety reducing. And then loneliness continues to decline as people are finding new ways to connect, which is really wonderful. What people are worried about: slight decrease in hitting goals, a slight increase in all of the above, but also a pretty sharp decrease in people worried about their jobs. And so I think as things settle in, people start to find a way, or in some cases, things have gone poorly and that's already happened. So this is just an interesting thing to keep track of and interesting to see how the whole community is doing. Let's dive right into donor advised funds, which is what people want to learn about today. So we asked, first and foremost, is this a priority? And part of this is a biased sample, to be honest, because you wouldn't come to this webinar if it was a super low priority. But almost half of you said it's a somewhat high priority. 31% said it's a very, very high priority in terms of getting new donor advised fund gifts. 18% said a low priority, and virtually no one said not a priority at all. So it seems like a pretty big, important part of your overall strategy. But the key challenges that people have are things like 86% said, I need help figuring out who has a donor advised fund. Who can I even ask for a DAF gift if I don't know who has one? 53% said, I don't know how to market donor advised fund gifts, which makes sense. 40% say, I struggle to find out the identities of some people who give us DAF gifts. So even after you've successfully gotten a gift, you can't say thank you and you can't steward that person effectively. And we'll talk about some strategies there. And then 10% said, I wish the DAF gifts would arrive faster. And so most of these gifts are coming by check, especially now, checks can be a little bit more challenging to receive because someone's got to go to the office. If you have a PO box that's full, those will get bounced by the postal service. So there's some complexities there. We can probably talk more about those in the Q&A if people want to. So what to expect in 2020 and 2021? So when we asked people how did the number of gifts in 2019 compare to 2018, about half of you said they increased, and then most people, or a third, said not sure, and 19% said no, no change. Basically, no one again said decrease. So you can see a steady rise here. Here's what's interesting. This is the money going into donor advised funds. So how much money is going in? And 2018 is the last number that we have this, last year that we have this overarching number, because the 2019 stuff hasn't gotten published yet in 2020. So that's a little bit of context here. This is from NPT, or the Nonprofit Trust, which does a lot of great work. So what you can see is in 2014, only $20 billion went in, and in 2018, $37 billion. So almost doubling in a very short amount of time. This is money into the funds. If you look at money out of the funds, grants, you have a similar doubling. So $23 billion came out of donor advised funds in 2018, and our sense is that number is significantly larger in 2019 and will be even greater in 2020. This is the amount of money that's in DAFs. So you can imagine money going in minus money going out, plus money that's investments that have grown within the donor advised funds, because donor advised funds are usually not held in cash, they're often stocks or other things, so that money grows over time. So in 2018, there was $121 billion in donor advised funds at the end of the year. And we expect that number to be significantly higher, potentially up to $150 billion by the end of 2020. Now, just to put that in perspective, about $400 billion is given every year. So that's a little under 40% of all the money given to charity this year is money set in donor advised funds. So it's a huge opportunity, but also we need to find the path forward because a lot of that money is just hanging out in those accounts. So when we look at what's going to happen in 2020, let's look back at 2008 and 2009 to understand what happens to donor advised funds during a recession. So first thing to know is that money into donor advised funds dropped precipitously in 2008 and 2009. Keep in mind that this wasn't just massive job losses, it was also a stock market crash to a pretty extraordinary degree. Total grant dollars, though, only dropped by 7%, even though much less money was going into donor advised funds, almost the same amount. Now, 7% is a meaningful difference, but it's a pretty small one compared to the 36% of money in. As many of you know, DAF giving is not affected by economic uncertainty because that money is already quote unquote gone. It's already out the door and donors can't get it back. So it's a particularly interesting pool of capital that might make a really good gift in a moment of economic uncertainty. One thing I'll note when we think about what's happening right now is that we spoke with a very senior leader at one of the large commercial DAFs, and he said that April is the new December in 2020, meaning that this spring, they saw giving rates as high as what they typically see at the end of the year, when spring is typically the low season for giving. So a huge outpouring of gifts from donor advised funds is happening right now. And as we looked at what happened in 2008, 2009, it's important that the stock market effectively hasn't crashed, or it certainly crashed and then recovered in 2020. And so for most people, their DAFs, if they didn't give anything, the investments in their DAFs or the investment in their IRA is pretty much equal to where it might have been in, say, December or November of last year. So not quite where it was in February, but still pretty high and a pretty good amount of funds in there. And so that even within donor advised funds in 2008 and 2009, the value of those DAFs would have decreased because the stock market crashed and what people were invested in. But we don't really have that now. So this may make it an even bigger opportunity than previous recessions. Feel free to pop a question in if that doesn't make sense, and I'll make sure to clarify even further. So when we asked you all, how are things gone in the first few months of 2020, 30% said an increase, which is pretty significant, a relatively small decrease, which is interesting for deep economic uncertainty. When we previously asked you in different weeks, how's planned giving gone, how's major giving gone, how's annual giving gone, most people have seen a slight decrease in annual and major giving and an increase in planned giving. but donor advised funds are seeing a pretty significant increase for most of you. Now, when we talk about donor advised funds, we tend to talk about all of it as a sort of a monolith. People talk about donor advised funds as this overarching category. But really, there are three types that you want to get your heads around. And I'm going to briefly mention the third part, but really the top two are what we'll focus on. So category one is community foundations, the Boston Foundation, Silicon Valley Community Foundation. Most major cities have something similar to this, and many smaller cities or regional areas have one as well. We'll talk more about those in a second. And then national DAFs, Fidelity, Schwab, Vanguard, et cetera. These are usually affiliated or similarly named to a large brokerage house or a large bank. In fact, Vanguard Charitable is actually totally separate from Vanguard, the investment company, but they share a name and there's some affiliation there. And then single issue DAFs, which will be pretty irrelevant for most of you, although I know a few organizations on this call have them, but that's sort of its own category that we would go into at a different point. So a single issue DAF means the Nature Conservancy or Harvard or Cornell, usually these sort of very large, very sophisticated organizations, have their own in-house donor advised funds where they can manage money and then help the donor grant money either to only within that organization or outside of it as well. So there's some variance there. This is sort of next level and only really accessible to say the top 50, 70 nonprofits in the country. So we'll hold on that and we'll really focus on soliciting most of the money that's in categories 1 and 2. So let's also understand that these things are not co-equal. So your first category is community foundations, $33 billion in assets in 2018, a 15% decrease in assets from the year before. So the trend lines on community foundations are not really looking good. On the flip side, national DAFs, Vanguard, Fidelity, Schwab, et cetera, $72 billion in assets and 23% growth. So you can see these things are going in opposite directions. And if we extrapolate this out to 2020, 2022 even, you'll see likely much more growth in national donor advised funds and much less growth in community foundations, if not negative growth. So that's a key thing to understand as you work through your own plan going forward. And then single issue DAFs, which I mentioned just now, less than $4 billion, 10% growth, but still so relatively small compared to these other categories that they're not really worth your attention unless you have one in-house, in which case you probably have a pretty sophisticated team thinking about it already. So let's talk first about how to navigate community foundations and get donor advised fund gifts that are housed at community foundations. So these will have a much more active role in recommending nonprofits than the national ones. And that makes sense. Donors are looking to them for some philanthropic guidance, much more so than they would the other ones. What you want to do is, people are often going to community foundations and asking for money. What you want to do now is set up a Zoom coffee or a tea or a meeting or a phone call with your local community foundation and say, look, I'm not asking for money. I just want to understand the community foundation a little bit and understanding what your donors are looking to fund so that I know when I have the right opportunity to bring to you, as opposed to just barraging you with everything. And people will really appreciate that thoughtfulness. And if you say, if you know that they have a few donors who are really interested in education for girls or local conservation or community development or whatever it may be, you can then think about this third point, which is really key. Instead of pitching your organization, share a specific project or funding opportunity, and community foundation donors are much more apt to leap at that than just a general grant fund, right? And so you might say, we are trying to fill a $30,000 shortfall in our emergency scholarship fund, and pitching that instead of just saying our school is wonderful and it should be supported by the community foundation. And so this will be even more powerful if you've done step 2, which is saying, is someone really focused on children and education for children? Well, we had this conversation about X. Would you mind bringing this opportunity to that person? So really, really good opportunity for relationship building. And the nice thing about this compared to national organizations is that you probably only have 1 or 2 community foundations in your area that are going to be really meaningful here. And so you can really focus your experience and your relationship building there. Now let's move on to national DAFs, which are sort of the opposite here. So there's a much less active role that they play in recommending nonprofits compared to Fidelity or Schwab. Now, there's some small exceptions here if they have a philanthropic advisor for ultra high net worth. But for most of those folks with accounts, they're not looking to Fidelity to guide them in giving. And so outreach to these folks, and when we talk to people at the national DAFs, they say we get these calls all the time, but it's not really our job to tell our donors what to do here. And so some people are overly investing in trying to get through to Fidelity or trying to pitch Vanguard, et cetera. And this is probably a poor use of time compared to cultivating donors. Now, you do want to make sure that your GuideStar profile is up to date, as this is used as a resource by national donor advised funds as they start combing through, okay, what are the largest organizations who are working on X project or X type of entity? And you do want to understand that these DAFs are the massive growth for donor advised funds. They're really fueling it, and getting your head around a good strategy for national DAFs that is really donor-centric instead of fund-centric, as compared to something like a community foundation, is really key. So we'll talk about what a donor-centric strategy looks like in a moment. One of the biggest things people ask is, I don't know how to find DAF donors, even among my own supporters. So let's talk through that. And there are a couple of key things to know. This graph is incredibly striking. You look at how many donor advised funds existed in the United States in 2014. It's 241,000. In 2018, it's almost 730,000. So we're looking at basically 3 times the rate of donor advised fund gifts in just a few years. And if you look forward to 2019, 2020, you can estimate that we're probably going to cross at least 1 million donor advised funds, if not more. So this is a really key point. It is not only that donor advised funds are new to you all and potentially confusing, donor advised funds are new to the people who have them. And so when we talk about planned giving a lot, one of the things about planned giving is that people only do it once or twice or 3 times, and they don't really talk about it at dinner tables. And so people are really heavily looking for social cues and guidance on how to use them because it's new and they don't really know how to do it. So you have a particularly adept moment right now to take advantage of the sharp rise in donor advised funds in the same way you might the sharp rise in qualified charitable distributions that are so new that you can really shape behavior now for decades to come. So I hope that makes sense. But the newness isn't merely new to you, it's new to all those DAF givers. So if you look at 2020, you might think that 65, 75, 80% of people who have donor advised funds right now have had donor advised funds for less than 5 years. And that will be a really big opportunity to help shape that. So if it feels new and confusing to you, you can bet how confusing it is to someone who's not a professional fundraiser. Let's understand DAF donors. So 80%-ish of DAF donors are over 50, and that's been true for a while. So it's your wealthier, older donors are more likely to have a DAF, and that's just a fact. But it's also true that 13% of DAFs in 2019 were opened by millennials, which is up from about 4% just a few years earlier. So you don't really want to count people out to the same degree that you might have done a few years ago. Part of this is that a shift in workplace are getting advised funds as a perk. And so creating donor advised funds in pre-tax money, which is an interesting avenue for a lot of young knowledge workers. And what you can see here is the average donor advised fund size has gone down precipitously from 2014. So 2014, 2015, 2016, it's pretty similar. 2017, 2018, it drops pretty dramatically. Now, why is this? Are people spending all the money in their DAFs? No. What the case that's happening is that more and more small DAFs are being opened. Fidelity, for instance, is a $5,000 minimum, and that's true across a lot of the national donor advised funds. So especially with the tax changes that happened in 2017 and 2017 into 2018 and continues, you'll see more and more middle class, upper middle class donors taking advantage of this, whereas in 2014, it might be only your highest net worth, right? And so it is more and more likely every day that the person you're talking to has a donor advised fund and is trying to make the most of it. So let's talk through some more strategies for finding DAF donors now that you have a better sense of who they might be and how many there are, and also that they really need your guidance to understand what to do next. So first things first, DAF giving should be available every time you request a gift via marketing. So on your primary donate page, there should be something that says give from my donor advised fund as a link. So if people are going to chip in $20, you want to make sure that they see the option to give from their donor advised fund. Why? Because the same people who are making $20 gifts might make a $200 gift from a donor advised fund. So virtually all the time, people who would give cash would give larger gifts out of donor advised funds, the same way they would give larger gifts out of stock or out of QCD. So you're probably shortcutting yourself to a pretty dramatic degree if you're not prompting people every time they think about it. On every mailing, you want to just have a very clear checkbox that says, I have a donor advised fund and I would like to learn more about giving to insert your organization this way. So every time you're contacting donors, this should be front and center, and you want to start building this long list of supporters who have a donor advised fund for exactly moments like this when you should be calling them one by one. And then every survey you put out, just make sure that there's a quick question on DAFs as well, understanding donors. And when we think about the surveys that we do with our own partners, they almost always have a question on donor advised funds because many people are tagging donor advised fund donors and immediately assigning them to a major gift prospect because it's a signal that they have both wealth and philanthropic interest. So it's a really big opportunity just to know who has a donor advised fund in your world. Okay, 2, in every major donor conversation, you want to ask. And so, sometimes people don't know how to bring it up. And here's a little bit of language that you can use and you can share with your gift officers. Many of our supporters give out of a donor advised fund. Would you like information on how other people are using their donor advised fund to make a big impact? So the key thing here is this, this social proof that works so well in other types of giving. And for many people, even though they're sophisticated donors, they're still navigating how to use a donor advised fund. And so by you sharing how you're doing it, there's an opportunity to help shape the way that they're giving and the frequency that they're giving. You also want to develop one or more DAF stories in the same way you might for planned giving or other types of donations. Third, it was striking to us how few people have a way to mark DAF donors in their database. And so you want to tag people, not only those who have given a donor advised fund, which is a common way to do it, but also everyone you find out through surveys or conversations, et cetera, who has a donor advised fund, so you can start marketing to this group as well. Some databases, and this is a little bit archaic, but don't have a tag for donor advised funds. So if you have one of the older databases for your donors and they don't have it, you might want to consider what is the tag that we're using the least, and everyone just agrees that that's the tag we're using for donor advised fund donors, because this type of gift is so important that you not having the right tag shouldn't be an excuse for not really keeping accurate records. You should also call whatever software provider is making your database and say, I cannot believe you don't have a tag for donor advised fund donors yet. You need to get that in the next 6 months. And most of the providers will be able to do the new tags pretty easily. And so it's 100% worth your time. And if you want to, a little bit of complaining might go a long way in solving that problem. So don't be afraid of doing that as well. All right. And then the big thing here is that sometimes people get a donor advised fund gift and they don't know who it's attached to. And one thing that's interesting here is the percentage of gifts that don't have information that when you ask nonprofits is like 10, 20, 25%. When you ask the Fidelities and Schwabs of the world, what percentage of your donors want to remain anonymous? It's much more like 3%. And so what it means is there's a gap here where information isn't being transmitted accurately, and not because the donor wants to remain anonymous. So you may have some donors who are trying to share their information with you, but somehow it doesn't get there through the grapevine that is donor advised funds. So on your ways to give page or on any information about donor advised funds, you want some language like this. And we'll send the slides afterwards so you can copy it verbatim. But when you make a donor advised fund gift, it's possible that the sponsoring information will not share your information with us. please send us a note or fill out this form if you have a form available when you've made a gift, so that we can make sure to thank you and ensure your gift gets to where it's intended. So if you are, let's take the University of Chicago as an example, and someone's sending you a DAF gift, and they really want that DAF gift to go into engineering scholarships, but instead it goes to general fund, that's a huge problem. And this is one way that you can, it's a little scrappy, but it's one way that you can fix that. And then bonus, I'm always surprised in conversations how few people are talking to their past board members, especially in a moment like where we are right now. So your past board members are extremely likely to have donor advised funds. They fit the demographic, psychographic, behavioral trends, economic aspect of who's likely to have a DAF. There probably should be your first call in a moment like this. They're also deeply committed to the organization. And I'm always stunned at how few people are in regular touch with their past board members. So this is a really big opportunity. I would make a little note for in the next 2 weeks, call all of your past board members if you're a major gift officer or director of advancement. This is very likely to be an extremely fruitful use of your time, and one that I'm surprised how many people miss. Okay, so that's sort of top line basic strategies for donor advised fund. Now we're going to talk through a few sort of next level things that a lot of people are missing out on, but it's a way to be extremely effective with donor advised funds compared to what you're currently doing. So first one, many more donor advised fund gifts should be recurring gifts. Most donors don't know that this is an option. In the same way that most donors don't know that recurring QCDs are an option, it's an incredibly powerful thing. And it may be hard to bring that up to someone who just made a gift. Thank you for your gift. Would you like to make this a recurring gift? But here's some messaging that we think is really effective. So I'll leave it here to read, but I'll also read it out loud for folks that are hard of sight. One of the biggest barriers to even more impact is that we, as the organization, often don't have certainty about how much money will come in during a given year. So many people choose to make a recurring gift, which allows us to plan more thoughtfully and make the most of your donations. And you can always cancel if you change your mind. So a couple things are happening here. One is you have a why. The why is we will be able to create more impact with more certainty. Then you layer on social proof. Many people choose to do this. I'm actually missing a word in the between gift and allow, so we'll edit it before we send the slides out. And you can always cancel if you change your mind, right? The reason people won't make a recurring gift is because they like having optionality and they don't want to be locked in. But this allows them to have that, except from a psychological standpoint, we know that people are much less likely to cancel a gift than they might be to not make one in the future. So if the default is the gift is happening, it takes a higher bar for them to cut it as opposed to simply not make a gift this year. So this may help you hit your goals for years to come if you start building this into your practice. Okay, tip 2, asking about beneficiary designations. Similar to recurring gifts, most donors do not have beneficiary designations for their donor advised funds, which, just to define this in case it's not clear, this means if they pass away, what happens to all the money in their donor advised fund? Now, there's 2 real options. One is they can direct it to a charity, and 2 is they can appoint someone new to be in charge of the grant making. So those are the options for beneficiary designation. And here's some of the language that you can use as well. One thing I've seen is that many of our donors forget to add beneficiary designations. So you're not saying you forgot. You're saying you forgot. You're probably smart. You already thought of this, but just in case, because I'm looking out for you, I wanted to raise it. Would you like me to talk you through some of the options? And they'll probably say, oh, I actually don't know if we have a beneficiary designation, but I would love to hear more. And I would love to hear what other people are doing. And so this is a chance to introduce leaving either all or a portion of it to your organization. So if you're thinking about plan giving, if you're thinking about, this is an avenue that's sort of untapped. It can't go to the kids. It's also the case that when you're having these donor advised fund gifts, you should be a good steward of your donors, and this is a good opportunity to be really helpful to them. Even if all they do is say, great, I'm going to add my daughter to be in control, well, then you know that the daughter is the person to connect with in the future. Third tip here is remember matching gifts. So almost all donors forget about this, but many employers will match grants from donor advised funds. They don't match donations to donor advised funds, But if you're giving a grant out of DAFs, it's very likely that it could be a matching gift. Here's a little bit of what you might say to someone who made a DAF, because this is your chance to easily double the value of the gift at no additional cost to your donor. So thank you so much. You may already know this, but many of our supporters don't realize that they can get their DAF gift matched by their employer. Does your employer do matching gifts? And so again, you're saying you're very smart, but a lot of people forget this, and it allows them to comfortably interact with the question there, and you may double the efficacy of a single DAF without costing your donor anything. So a really, really big opportunity there as well. All right, last sort of next level DAF tip here. So donor advised funds can take highly complex giving that, unless you are Harvard or the Nature Conservancy or the United Way or some of these very complicated, very sophisticated organizations, it might be hard to take. So to Fidelity, 60% of donations came from non-cash gifts, mostly stock, but also real estate, cryptocurrency, non-public securities, etc. So the Fidelity team is really good at taking these. You may be really not that good, and that's totally fine. So if you have a donor who has a complex asset, it may be that routing it through the DAF will save you time and resources, and also cut any risk of liability if you're going to take temporary ownership over a 3-bedroom ranch in Phoenix or something similar. And so if you have a donor who's trying to think about a nice gift and has a donor advised fund, you may be able to offload some of the work there and actually open up the amount of, or the types of gifts that you can take just by using this as an intermediary. And that will be really beneficial. So that person gets an immediate tax write-off to the DAF. The DAF is handling all of the complexities, and then you're getting the funds in the end. So something that a lot of nonprofits who would otherwise have to refuse a gift don't always think about, but this is a really cool option, and might save you a lot of time, especially if you're feeling like you have too much to do already. And one other thing I wanted to chat through is this cool idea called Half My DAF, which is DAF grants of up to $10,000. It's $1 million in total. You can Google Half My DAF. And what this means is that, given the urgency of the moment, for donors that are going to give up to half or at least half their donor advised fund, they can ask for a matching grant. So if you have donors that are in that category, check this out. It might be an easy $10,000 in additional funding to your organization. And there's a lot more on that website, but I just wanted to raise it as a potential option. Okay, so that is a lot. I assume there'll be a bunch of questions. Let's go through a couple of resources, just so you know you have them on our resources page, a whole bunch of phone scripts, email templates, some more case studies of organizations that are navigating this successfully, some of our favorite emails from other organizations. So feel free to take a look at that. And if there's things that you think you need, let us know. We have a very creative team, and we love being helpful here. Second thing to note is, not tomorrow, in 2 days, on Thursday, March 28th, we're doing an overview of some planned and major giving tools, and also some case studies of people that are being successful right now. So feel free to RSVP in the survey to that. I won't be on it, but it's being led by my colleagues Jack and Leah, who are wonderful and brilliant, and you'll love to meet them if you haven't already. And then last thing, as we talked about last week, planned giving continues to grow very quickly. And so one thing we wanted to do is make sure that these donors are stewarded. So if you are not a FreeWill partner and you want to see if there have been any bequests to you through our site, just let us know. We'll send around a link that you can fill out after this, and that will allow us to sort of dig deep, see who's given you anything, let you know about the gifts, and if those people have opted to share their information, hopefully add some more donors to your database, or let you know that some folks have joined your legacy society that you might not have known about. So we're really happy to do that. And my colleague Jade has been working really hard to make that possible. All right, so we're gonna start. We've gone a little bit shorter this time. We're gonna do some deep dive in Q&A. My colleague Simone is dropping a survey in the Zoom chat right now. So please fill that out for RSVPing for the events, but also feedback and CFRE credit. We will be off next week, but in 2 weeks, we're going to start talking through how to plan fall virtual events. And we've got a great virtual event expert coming to join us. So I'm excited for you to meet her. And then if you have any ideas or if you have any questions, feel free to shoot me an email. So give me a moment to start reading some of the questions. There's a Q&A button on top of the chat, so it's separate from the chat. You can drop questions there, and my colleague Simone is doing heroic work of sifting through them. Great. So a lot of people asked, what are the reasons donors invest in national donor advised funds over community foundations? Why is there a disparity between them? So this is a great question. I think the donor advised funds, the national ones, have done, frankly, a much better job at making it really, really easy to sign up. So instead of starting a new relationship with a new type of organization, I, for instance, am obviously very philanthropically inclined and deep in this world. It would take me some time to figure out how to go set up a fund at the local community foundation in New York City. Whereas if I'm already online on the Fidelity website where I keep my banking money or whatever it might be, it's much easier. And so they've done a really good job of integrating it with other financial instruments. A lot of people think about sort of all of their finances, including their giving, as opposed to sort of separate philanthropic options. And so those folks have done a really good job in making it seamless to set up. In some cases, because they have so many funds, their fees are lower as well. So it's a trend that I think we're likely to see continue, and don't know if it's a good or bad thing, but it certainly is a thing. So we should all pay attention to that. Emily asked, why is the trend for community foundations decreasing? I think we just asked that. We had a lot of questions on DAFs, on community foundations. Marianne asked, can you offer the why there's more money going into and out of donor advised funds year over year? Does the aging population, demographics have anything to do with it, or is it donor education year over year? I think there are basically two things that are happening simultaneously. One is more people have donor advised funds, and so it's more word of mouth because more people are sharing that. And sort of like any new product, whether it's Diet Coke or when Uber came out or anything else, as more people use it, more people share. And so people are seeing the benefits of donor advised funds from a donor standpoint, and that's spreading and spreading. The second thing is, particularly the national DAFs have put a lot of effort into making it more accessible for people. And so we see things like lowering the minimums, making the sign-up process easier, allowing workplace giving to feed into donor advised funds. So these are a couple of things that are happening. And then the third thing is the Trump tax changes in 2017 that took it into effect in 2018. So we've done a lot of research around qualified charitable distributions, which are gifts out of your IRA, and suddenly they became much more important after this. The reason is that more and more people stopped itemizing deductions, and so charitable giving doesn't have that same tax benefit for most people. So last year, only 10% of Americans itemized deductions, which meant for 90% of people, there was no tax benefit to giving charitably. So what people are doing is they're chunking their donations in 1 year to get over that threshold and then giving money out of donor advised funds in subsequent years. So you'll see that, I think, a bit more as there needs to be more almost financial engineering to get tax benefit from charitable giving. For those of you that are new to DAFs, can you explain the definition and purpose of donor advised funds? Yes. So sorry to have skipped over this. Donor advised fund is a fund that is held at a charitable institution. This charitable institution doesn't actually do charitable work. It just holds money, and then you suggest grants, although in practice, you really get to pick where it goes. And that money is then distributed. But you're getting a tax deduction up front. So if I make a $10,000 gift to a DAF this year, I can give $1,000 out for the next 10 years. I get no tax benefit in the subsequent years, but I get a $10,000 break this year. And so it's a really good opportunity for people who are trying to get more of a tax break. And simultaneously, when that money goes in, it gets invested. And so usually it grows a little bit. It's sort of for a while, it was a poor man's version of a private foundation. And increasingly, it's taking over the roles of some family foundations or private foundations because it's less regulated and easier to manage. When a donor decides to set up a DAF, about how many investment options do they have? Do they have slower growth or more aggressive DAFs or more aggressive growth the same way that you might in a 401k? Are these options pre-selected, or can a donor build out their own DAF portfolio? Second, looking at these options from a charity standpoint, how will these donors stand to lose if the market crashes and if they are invested in a more aggressive portfolio? So, great question. Similar to other brokerage houses, there will be a range of mutual funds, stocks, etc., that are in a donor advised fund. In fact, most of the same options will exist, although this does vary a little bit based on the different body it's in. So if you have a small community foundation, you may have fewer options than if you're at Schwab or Vanguard, which are highly sophisticated investment houses. But usually you can buy and sell similarly. In fact, many people have their financial advisor manage their donor advised fund money the same way they might their retirement account. My guess, and I don't have data to back this up, is that people in donor advised funds are more aggressive because they're trying to maximize their money because the loss personally isn't as strong if some of it loses. So if there is a stock market crash, similar to what we saw a few months ago, although we've recovered pretty well, there may be significant reductions in donor advised fund giving because there's so much money that leaves. Now, we actually have evidence of this. In 2008, 2009, the stock market did crash alongside with job losses, and different than the bifurcation we're seeing right now. And what happened is that people kept giving. They kept giving the same amounts. And so we may not see a huge drop off. Do DAFs contribute to each other? I believe not. This is a question about RMDs. So those are required minimum distributions from IRA accounts. Can an RMD from a traditional IRA be directed to a DAF? The answer is no. So it cannot. You cannot give an RMD to a private foundation or a donor advised fund. This is a great question. How do we address donors that don't understand that we cannot recognize them as we normally would due to the DAF not being theirs? So this question is really interesting. What happens is that when you give to a DAF, the money is not yours. It's Fidelity's, and you get to sort of suggest to Fidelity where it goes. Now, so Fidelity basically does whatever you want them to do because otherwise nobody would give them money for their DAF. But when it comes to the charity, the sort of hard credit is to Fidelity, and you have to give soft credit to the donor. But when you think about crediting, you may want to think about, there's sort of the accounting measure. And so it may be that on your 990s, your biggest donor is Fidelity Charitable. But in things like your annual report, et cetera, you really want to be giving credit to the donor themselves and treat this the same way that you would any major gift. The exception here is that they can't use it for things like buying basketball tickets or buying tickets to a performance because they've already received a tax deduction, so they can't give something of value. Many charities choose to be able to give tickets as a thank you, but you'll have to sort of handle that in-house with your own accountants. But you certainly can't be purchasing things with a donor advised fund. What special information do donors need to give from their donor advised fund? Like if we have a link on the checkout page, what should the landing page say? So the landing page should say two things. One, it may want to have links to some of the major donor advised funds, but it should clearly have things like your EIN and the ability to make sure that they can direct the gift from the donor advised fund to the right place. So if you are an organization that may have other organizations with similar names, you really don't want to let that get messed up. I have a good friend who works at Human Rights Watch, and there's something called the Human Rights Campaign. Human Rights Campaign is focused on LGBT rights. Human Rights Watch is more similar to Amnesty International with a global focus, and they get sort of mistaken for each other all the time. And so you don't want that to happen, and you want to make sure the information is really clear. You also want to have that language that I shared earlier about making sure people are sharing that information when they do make a gift, so you can thank them appropriately. All right, let's do one or two more questions. Um, Janet says, do recurring gifts prevent gift officers from asking for increased gifts each year? The answer is no. You can go back and edit a gift at any point. So you'd much rather start with a baseline of this person's already giving $10,000. Could we move it to 12 than having to start at 0 every year and asking for 12? You're almost certainly certainly more likely to be better off asking for recurring gifts as well. And then Lynn asks, how do you find out which orgs match gifts, which companies match gifts? I do believe there's some online registries. I don't know the answer here, but you can also ask your donors, and most people will know. Let's do 2 more questions, and they're very similar. Are DAFs gifts exclusively C3? And Amy asks, can DAF gifts go to C4 or advocacy organizations? So Miles, yes, they are almost exclusively 501c3. They need to go to a tax deductible entity. Otherwise, people would launder money through DAFs to get a tax deduction and then send it to non-tax deductible entities. So if you're an advocacy organization and you have a 501c3 arm, a lot of people have an education fund or something similar, DAFs will have to go there, and they can't go to your political action committee or your 501c4. So it's a really important question as well. And then last question that we'll answer is Lori says, can you share an example of a donor advised fund survey question? You'd want to have this as several. And so the survey question is something like, I have a donor advised fund and I'd like to learn more about giving this way. Or I'd like to learn more about how other people are using their donor advised funds. So you want to be clear that you're marking people who do have donor advised funds in that survey. And it's a great question. I believe, by the way, on our resources page, we have a sample survey template for people to use that is free. And that does include a donor advised fund question. And if it doesn't, let me know and I'll send you some text on it, but it should. All right, let's wrap up there. Thank you guys so much for joining again. I'm really excited to kick off the summer. I hope this was clarifying. I know that donor advised funds are this sort of big, strange new world that we're all trying to navigate together, and I don't pretend to have all the answers, but hopefully there were a couple good answers here and a couple of new questions for you to explore on your own. So really excited about this, really grateful for your time, as always. I'm glad to see so many people are doing really well. It's been a long few months together, and we'll look forward to seeing you in 2 weeks when we're going to talk more about virtual events and what it's going to be like to bring a lot of our supporters together in a way that's been different from what we've done in the past. So thank you again. Please fill out the survey and let us know what went well or what didn't, and just trying to make this a little bit better each time. So have a wonderful week. Glad it's a short week for me. Glad it's a short week for you, and look forward to seeing you soon.